On everybody, so we're going to take a look at the stock market overall as a whole. We're going to be checking out the S&P 500, the triple Qs, which is the NASDAQ. We're also going to check out the IWM as well as the Dow, the diamonds. So before we get started into this video, please do me a favor, subscribe to my channel. When you're done watching this video, go ahead and give me a like on this video, and also join the Discord that's down in the description box below. But just getting into it today, kind of an inside bar, kind of, you know, that inside bar trading within a range type of feel today. We had that strong push yesterday, you know, insane move across the board, especially in the SPY and especially in the triple Qs. So one thing to keep in mind, anytime we have such a significant run up or run down, you could always expect a little bit of consolidation. What I did like today is that the bulls held the level and we closed above yesterday's prior high. So yesterday's close was 468.20, right around that range, and we did put in a high of 468.89. Today, even though it wasn't a whole lot of great price action, very choppy intraday, we did get over this channel here and we closed at 469.52, right in that range, and we did put in a high of 469.98. So one level to keep in mind going forward, because we don't know what the market's going to do, but what we want to see is this 470, 471 area on the SPY. As soon as we get a daily close over 470, 471, we're going to be testing all-time highs again at $473. We are going to have some support that is rising here. First level of support being this Bollinger Band at around 464. We do have a rising 20-day moving average at 462, and the rising 5-day, which I expect to overlap that 20-day at around 461. And then we've got the 10-day moving average resting down here at around 460. So if we take a couple more days just to kind of consolidate out a little bit, we can definitely give these moving averages and these supports enough time to catch up. If the market does want to go ahead and just, you know, kind of create this little bull flag in here while these moving averages catch up, which is completely fine, just means that the ramp up is going to be even more that intense. Or we can get that 470, 471 break to the top side. First price target is going to be 473.54, and then after that 475. Those are the price targets that I have on the SPY. If we take a look at the triple Qs, so triple Qs, same kind of price action. We did have this bullish hammer candle close here. Intraday we were holding this level pretty good. We held it 3 consecutive times, 396. So we're going to definitely want to keep an eye on that 396 to the downside. If we do have a couple of more of these like inside range trading days, and then we do see any kind of weakness with any kind of news headline or anything that may present itself, let's definitely watch that 396. That's going to act as a level of support. Anything below 396 is going to take us to hard support down here at this channel and 10 and 20-day moving average, and that price is going to be around 393. However, with the bullish hammer here, what we're looking to do is take out this 400 level. Just keep the numbers nice and round here. 400 is going to take us to this initial resistance here at 401. This is the big level here. So if the NASDAQ wants to continue to push higher and we want to have this quote unquote Santa Claus rally into the new year, we're definitely going to need a daily close over 401.35. And I think once we do that, we're going to start testing. First price target is going to be 404, 405. And then obviously once we get out of this channel here, back to all-time highs at around 408. Overall, market does look pretty strong on the NASDAQ 100. So keep your favorite stocks in mind. We are going to have hard support down here at 393, as well as the rising 5-day moving average at around 391. If we did want to come back down here and fill this gap, we do have support at the 50 EMA at around 385, 386. I don't expect to do that this year, just due to the fact that you know, they wouldn't have gapped us up over all of these levels of supply if they were going to just pull us right back down. Okay. I just don't see it happening. Now, could we trade within this range or trade down here within this range? Of course we can, and then ramp higher, but that just means that the move to the top side is going to be even more that violent. If we just take a look at the Dow Industrial Average, out of all of the indexes, the Dow was only up 25 cents on the day, 0.07%. So we have to keep an eye on the Dow here. It did come into resistance going back to this October 26 candle right here. So if I do draw a trend line here, if you really think about it, the Dow is the first one to push off of this 100 and 200 day simple moving average. So they're the ones that really got this sort of bounce back started. So if the Dow wants to go ahead and take a couple of days off and go ahead and breathe, we are going to have initial support down here at $354. And then we're going to have hard support right here in this gap fill at the 50-day moving average at around 353. So don't be surprised if you see 1-2 trading days kind of chop around, and then we kind of make our way back down here to fill this gap, which would be an easy gap to fill, and then kind of bounce off it and go from there. Last one that we're going to be looking at is the small caps, the IWM. So the IWM, same thing, kind of like all of the other indexes here. Nice push off the bottom here. We can definitely call this a clear line in the sand. Anything below this 211, 212 area is going to be more room to the downside. However, I don't expect it to break down just due to the fact that on the IWM, it's been like a year-long consolidation. We did have that false breakout to $244 and then immediately crumbled all the way back down. However, we did get a nice bounce off of this area here. So there is showing that there's some buyers stepping in and some level of demand here. The next area that we're really going to want to take out is going to be this 226.74. From 226.74, we're going to get a little bit of rejection here at this 227, 228, which is going to be the 50-day simple moving average. I think as soon as the small caps start to close over this 50-day moving average, a lot of these small cap names are going to start to get some love with it. Just think about it like this. Anytime your index that's tied to the stocks that you trade is trading below the 50-day moving average, it's very, very hard for those stocks to get pulled up. Anytime they're trading above the 50-day moving average, or they start to reclaim a significant level like the 50-day moving average, stocks can start to get pulled up. So if we are going to have an end of the year rally, a January rally, we're definitely going to want to keep our eyes on the IWM. So as soon as we close over this 50-day moving average is going to be extremely, extremely bullish for a lot of the stocks that have been beat down for a while now. So guys, if you did like this video, do me a favor, join my Discord. That link is down in the description box. Like I said, subscribe, like, comment, and I will see you guys on the next video.